good day for our markets yesterday. We managed to hold up along with the rest of the globe. But once again, it's going to be a truncated week with just today and tomorrow being trading days. So let's see whether we actually manage to hold on or not to the kind of gains that we made. But yeah, the fact that FIIs turned net buyers, and that too with a huge quantum as opposed to the DII selling, almost in excess of 6,000 odd crore rupees. That was the kind of buying that you had from the FIIs, and the fact that we managed to post the biggest single day gain that we have through this year so far, that in itself gave you good confidence. It was the underperforming sectors which actually leapt up more, and the broader markets as well held out very smartly. So yeah, may we have more such long weekends, and may we come back with this kind of a market always.
Should go official off.
Yeah.
We demand for 3 day, 3 day weeks.
Yeah.
Saturday, Sunday and Monday.
Yeah, look what it does to the market.
Exactly. I mean, nobody's going to complain.
Yeah.
You know, one of those, the nation wants it.
Yeah.
Traders want it. Okay, now, what's the big thing? What is the big thing what is the big question, or what is the big thought which is occupying everyone's mind this Wednesday morning? Let's look at some questions. Question number 1 will just come up on your screen, which is that what we saw on this magical Monday was just a bout of short covering, or there is a trend reversal, which is that a fresh new round of rally or a fresh new trend in the market has started. Very important. Was it a short covering rally or a fresh round has started? Second question, again, very, very apt in terms of what you should be doing and what you should be approaching the market. Should investors wait for a dip, or this dip ain't coming, looking at the global volatility and looking at the way how the trade tariff is moving? Third, what is the next moving piece in this entire trade tariff? So far, we've not heard anything from China. So will China, or any official communication from China, will that be the key to the market? And these are 3 questions, Aisha, which I guess in a sense are important. Was it a one-day wonder? Is it a bout of fresh short covering? Is this beginning of a new trend? Should you buy for the dip? And globally, what is the next big factor which could influence the market in terms of news flow? And I think it is news. I think today you could say that these are the 3-4 questions which in a sense are occupying everyone's mind. Anything else which is coming on your mind?
No, that's it. The fact that, the global markets have taken a little bit of a retreat. So, the fact that we were pretty much on a one-way move up, does that get stalled? Are we only sort of following what the global markets were doing? That remains to be seen. The fact that S&P 500 as well as the Dow have managed to snap the 2-day winning streak, and what a winning streak it was, that's kind of stalled a little bit. Trump is saying that China must return to negotiations, so that continues to be in a limbo. We're still, awaiting any official comment coming in from China. The fact that they've just been posing retaliatory tariffs on US, but you've not heard any official comment coming in from them just now. But yeah, the US dollar has halted the sell-off. It's staying around that 100 mark. Futures have also declined. Nvidia is the one which is actually dragging markets. So it's a little bit of a limbo. What we really need to see is, are we only following prey to the global markets, or have we rebounded for good on our own inertia?
So, Asha, globally, I think China holds the key. And I'll tell you why that is important is why, because, US slapped a tariff, China retaliated. US increased the tariff, China retaliated. Now, the US administration has extended a tiny olive branch by saying that, we want to go easy on specific categories. We understand, we are ready to talk. China has not acted. There's no official communication which has come from China. So it clearly means that right now, this entire war between US and China, while US has extended an olive branch, China has not really reacted or acted. So that really becomes this gray area now. By the end of this week, if you don't hear anything from China, then the world financial markets would assume that the trade war is not getting over and there is no reconciliation. So for me, that is the most important cue. I think the headline maker for next 3 days is going to be China. It's not going to be US. US has already given you this window of 90 days. So nothing ain't going to come from there. But whatever they had to do in terms of a time frame and also a hint to the Chinese administration, that I think is given. Then you look at India and you say, okay, we've come out of this entire so-called Trump bottom. We are well in the green. FIs have come yesterday with a bang, and the positioning, I think, of India is very unique, given that there is no retaliation, bilateral agreements on. So on the tariff front, I don't think you have anything to get worried about. Monsoon looks okay. Inflation well in control. Valuations not very stretched, and SIP floats, it continues. So the points what we've been talking about it, crude is down, commodity is down, monsoon is going to be strong, inflation is looking up. All these factors, change the India appeal. The question now is that, do you chase the market now? Do you stay with the market now? Or you say that, okay, the train has left the station, I'll wait for the next one to come on. I think that's something which is important.
Yeah, I just want to mark what the global handover has been. For, of course, US, they were baited a little bit. So very mildly in the red is how the US equity markets actually, closed in. Traders are still awaiting the retail sales data, and that's perhaps going to give some sentiment on how the US consumer is feeling. But Asia this morning, you've got a good 2% of a cut coming in for Hong Kong. China is down about 21 points, and that equates to about almost 0.6% knock coming in on the Shanghai index. And even Japan is lower by about almost 250 odd points. Investors, you've got better than expected China GDP data, but let's see, it's really coming down all to what kind of negotiations happen eventually between US and China. I don't think it's the economic data points that the market are, focusing in on, and that too backdated for now. For us, of course, things seem to be looking up. The fact that you've got a ease off coming in on the inflation, the retail inflation has eased now to 3.34% in March. WPI has dropped to a 4-month low. And to add to that, the cheer, which always acts as a cheer for markets and, of course, much of the economy as well, the fact that it's going to be an above normal monsoon, that's the forecast by the IMD. Initial imprints, though, yet to see when we actually see the arrival and onset of monsoon. But so far, the prediction is that it's going to be an above normal monsoon. So yeah, like you said, that the markers for India, they all seem to be looking upwards and acting as tailwinds.
Yeah, so what do you now focus on? I don't think this time earnings season is going to be that kind of an harbinger of what to understand and what to indicate. In general, if the progress is slightly on the upside, which is Q4 is better than Q3 and Q3 was better than Q2, I think markets would be satisfied with that kind of an outlook. What is going to be crucial here is that because inflation is down, what really would be the impact of that on the NBFCs, how demand comes back, and given that inflation and the tax cut effect would kick in, are we in for a mild revival in the consumer demand per se? I think that is important. Second, I think from a market standpoint, commodity consumers, they become the next port of call. So if you're frankly asking me for a theme or a sector, I think it really would be commodity consumers, which is where the bulk of impact would be now visible. We are in a situation where companies will come out and they may not give very great. If you're a commodity producer, you will give a great result for Q4. If you are a commodity consumer, you will give a great outlook when your Q1 numbers are coming. So for me, that I think is important. See, Aisha, inflation coming down just in and around 4% is just what RBI wanted. That look, I don't have to worry about inflation with this kind of an interest rate environment, with where the monsoon is, with where the crude prices is. Maybe I can, continue to pump in more liquidity. If not a 50 bips rate cut, a 25 bips cut is something which can be justified. While the world is grappling with inflation, it's like the 2022 and 2023 story for us, when the world was worried about inflation, but RBI was able to keep the inflation under check. I mean, that famous line by the former RBI governor that I know the elephant is there in the room, but I know the elephant will also go for a walk very soon. So I think, from a market standpoint, if you worry about Mehungai, I think that is where it's great
Things are
news.
under control. Yeah.
If you like this video, then like, share and subscribe to ET Now.